Gold is currently on a bull run and its prices are hitting record highs. And as the festive season is around the corner, is it the right time to invest or is it too late? Well, over the past 4 years, gold as an asset has delivered phenomenal returns, rising over 152% in the domestic market and outperforming nearly every other asset class. For investors wondering when is the right time to invest, let's see what our analysts have to say. An analyst speaking to ET Now, Sudesh, expressed strong confidence in commodities, stating that commodities hold real value and people trust them as real money and their prices will increase in the long term. As per the analyst, in the short term, investors might experience fluctuations of 2 to 5%, but emphasize that every dip should be seen as an opportunity. The analyst remains bullish on the long-term trend for precious metals. Apart from this, according to Philip Newman from Metals Focus, gold will continue to strengthen, with gold setting new highs this year and into 2026. On the bullion side, he sees the next target of $3,900 to $4,000 based on the projection of rising uncertainty in the coming years. So when should investors buy gold before Diwali? Kirit Bhansali, chairman of GJEPC, told that investors should look at purchasing gold before Diwali instead of waiting until the last minute. He further added that given the current state of the market and geopolitical pressures in the world today, a major price correction seems very unlikely. Gold prices may start to rise again month on month, which could have an impact on budgets. Now the question is, why are gold prices rising? Gold is considered a safe haven asset, which means it acts as a hedge for investors during market turbulence, economic uncertainty, or geopolitical crisis. So at the time of crisis, investors usually flock to gold to protect wealth, making it a reliable store of value and financial security. Looking back over the past 5 to 6 years, global geopolitics has been marked by significant disruptions. These include the ongoing Russia-Ukraine conflict, the escalating strategic rivalry between the US and China, and dramatic shifts in the Middle East, such as the 2023 Hamas attack on Israel and the fall of Assad's regime in Syria. The Federal Reserve Bank is one of the most influential authorities in the global economy, with its decision having far-reaching impacts worldwide. However, recent tensions between Fed Chair Jerome Powell and US President Donald Trump have raised concerns about the Fed's credibility and independence. This uncertainty has prompted investors to turn to gold as safe haven against potential inflation and currency risks. The industrial demand for gold has increased dramatically in recent times, largely attributed to its essential role in green technologies, including those employed in solar panels, electronic devices, and electric vehicles. Increased industrial use, particularly in China, and growing renewable energy sectors and supply shortfalls are all contributing to the higher price. When the US dollar weakens, gold prices typically rise. This happens because a weaker dollar makes these metals cheaper and more attractive to buyers holding other currencies. When central banks purchase gold, they increase both long-term demand and communicate confidence in gold as a safe haven asset. Purchasing gold also tightens supply, alters investor sentiment for gold, and supports price increases, particularly when economic or geopolitical uncertainty emerges. In addition, some of the long-term demand may come from diversification, which fuels sustained interest and support for gold prices. So, are you investing in gold this Diwali? Share with us in the comment section below.
If you like this video, then like, share and subscribe to ET Now.